Hello, everyone. All right, give me a couple minutes and I'll get this link out in all the various platforms. I hope you're all doing well. Share it in Telegram and on Twitter. Hey, everyone. All right. So we're certainly seeing a bit of a short squeeze here, some longs opening as well, but primarily a decrease in open interest. Yeah, I did take a long from down here, this sweep of the range lows. We'll look at that on the trading view chart shortly. But there certainly was the premise that we're still in a range. I did take profits off of it, and I have some running. I was actually looking to add back to that position. We had bullish absorption forming here as we were consolidating after the initial sweep, waiting for this wick to get swept. We just front ran it barely, so I didn't get an add, but that's okay. But in the members live stream, I suppose that was yesterday. Or was that? No, it would have been yesterday. And that's when I was looking to take this trade where I was adding to the position. But I was just pointing out, we have a lot of shorts that have started opening here as we were grinding down. Then we start forming this horizontal range. I'll cover a couple things while I'm here. I had a long open off of a sweep of one of these lows, but I did close it early, just under break even, because I started identifying this as just grinding price structure and not really a range. And typically this grinding price action, whether it's to the upside or downside, you see it on low time frames, high time frames, it ends in impulses. And so I just decided to close out my longs, wait out the weekend. And the idea of this trade was to let price come down and sweep the liquidity under these lows that formed over the weekend for a nice clean long entry, nice tight invalidation. And I just pointed out, you could kind of imagine this idea where we come up and squeeze out all these shorts that opened on the way down, which we are doing to good effect here. You see a lot of shorts closing, lots of volume coming in. So let's go over to TradingView. Just going to cover a few things. I do have some Elliott wave ideas that I'm looking at. I shared this, I guess, last week as a basic idea in the Discord. Let me go over to the Discord really quick. So anyways, I had this idea of us coming down into this ascending structure 786, and maybe I won't get into the nitty gritty, but seeing a running flat up into a wave 5, and we did deviate from this structure a little bit, but the basic Elliott wave idea is still valid, I think. And so that would be down here. Instead of running to the 786, we came to the 886. We did break this parallel structure a little bit. If it was marked out like this. But anyways, this is still generally valid. It's hard to imagine that we don't at least take the liquidity above either these highs or these highs. I'd be curious to see how price reacts to that, if we just break out or if we sweep the liquidity and reject. But from an Elliott wave perspective, I certainly wouldn't mind seeing this level tapped around 32,400, which of course coincides with this major high. I think we'll look at some high time frame support and resistance ideas. I am going to clear off this Elliott wave for now. I want to just talk about something really quickly in regards to the Discord. If you are considering joining, yes, I share trade ideas that I'm interested in. Short ideas, long ideas. I talk about what I would consider a valid trigger. So like, for example, this is where I was wanting to add. This was the long setup. So I share these setups and I give updates along the way of my thoughts on the position. So this is where I took that long. I took the long. I explained all the reasons I took it, and just from a psychological and trade execution perspective, trade plan and all that I don't really care if we go up or down. I feel I've executed a valid setup. But the purpose of this Discord is not to get signals. I share my ideas for educational purposes. They're all extensions of all the stuff you'll find in the educational content. And it's really a place for you to learn and grow and, you know, even develop your own trading style that suits your personality and your lifestyle. We obviously have a lot of fun in here, but yeah, it's just keep in mind it's not designed to be a signals group. It's designed to be a place to learn and grow. So, that said, let's head over to the charts. There's a couple things I want to note here. So we kind of have this region of support here that was support back in the summer of 2021. And I view this as a high time frame key level. You can see we came and rejected from it initially, consolidated under it, impulse through it, we washed back down under it. And even here on a low time frame, we can see that. So my short setup here, which was never triggered, would have been if we consolidated under this, we swept these highs and then came back under them, under this level. But you can see we had just this is the 5-minute chart, a really clean reclaim of this level. And it might be surprising to some how cleanly price interacts with levels from 2021. But it certainly will. So that said, I consider a reclaim of this important on a high time frame. If we retrace, I consider holding this impulse low important. As far as liquidity ideas to the upside, of course, anything can happen. You can reject anywhere. I'd like to see these highs taken before I consider short setups. Now, if something else happens and structure completely changes, of course, I'll adapt to that. But ultimately, when you're looking to trade a technical setup, you want an entry trigger and validation. So like, for example, anything can happen here, right? Price could break down. It could sweep the lows, reclaim them, and then break down again. But what makes this a nice setup is this is recurring price action, where you form a range, sweep the lows or the highs. Even a short here was a valid setup. You have nice tight invalidation. And from here, you can have different targets, take profits, adds, whatever. But just opening a trade anywhere without any clear invalidation doesn't really make sense. And I'll just cover this really quickly because I think it's informative and educational. But for example, I took this long. This is a very similar setup. Seeing this range forming, seeing the liquidity swept, and you have the impulse to the upside of the range. This is also a valid short setup. Here we did get a nice technical retracement for an ad into the middle of the channel, local golden pocket, consolidating here. But anyways, you'll see this over and over and over again. Price will make a move down. It'll form a range. It'll sweep the lows of that range and then impulse. And those are setups I quite like. Same thing to the downside. You form a bit of a range, you sweep the highs of the range, and you have a move to the downside. So I'm always looking for these ranges to form for potential long setups. Oh man, I hope the chastity belt meme doesn't have a long life. I don't want to have to explain that one. All right. So let's pull all our fibs here, the 786 and the 886. It's not unreasonable to pull fibs from this origin of the last pivot. Not surprising to see some volatility here, but we have, so just on from a structural perspective, this is a 30-minute chart. We have taken all of this structure. There's not a lot of structure here, obviously. Low time frame. This is just my style, my perspective. This isn't where I like opening trades at the origin of a move. I like to let price form some structure. I like to price or interact with key structure, key highs, key lows. Obviously, this was also a sweep of this wick. But I think big moves like this, ideally, you know, I don't want to be now reacting and opening a long now. I want to be positioned for a move like this. Ranges are for, in my style, ranges are for, sound went down, sorry. Hopefully this is better. I think finding positions and impulses are for sitting in those positions and making profits. Can you guys really not hear? My dashboard here says volume is loud. It's almost peaking. I'm trying to speak louder and put the mic inside of my mouth. Okay, nice. But you know, ultimately, you really, as a trader, you're trying to capture this volatility. You know, this was also a nice short setup, taking the liquidity above this range. We came and retested it. So trying to capture the moves both ways. Ultimately, knowing the reason you use risk management is eventually support resistance breaks, and you get stopped out of maybe your shorts or you get stopped out of your longs. Let the other side carry. But certainly it can make sense to have a directional bias on a high time frame. I would say that, is there anything really bearish that's happened yet? Not really on a higher time frame, but we are starting to see some consolidation here. And certainly still interested in shorts. I'd be interested in shorts taking these highs. I'd also be interested in adding to my longs. So I'll talk a little bit about that. It really depends where this high comes in, though. Like, some of these levels can't really be pulled in a meaningful way. You'd be, unless we do have a major rejection here. But you could imagine, kind of interesting. Yeah, I'm not really. I'd wait until we have a significant rejection to pull a fib here, because I think this is unlikely to be a major high, but it might be. But I'm going to let price consolidate. If we come back and retest this level, my ideal would be to get a certain type of structure And that would be, instead of this, which is tradable, it's just not as clean, where you have a range form here, and then you sweep the local lows into that level, and you wait for the reclaim. That gives a nice clean trigger. So it'd be something like this, where you have the range form, you have the liquidity grab into the key level. And how you trade a level is oftentimes dependent on the local structure around that level. Sometimes you can have a local entry trigger like this, where you have a local range, you have the sweep, you have the reclaim, so you have your long entry, you have your nice time validation. But sometimes you don't always get that, but that is definitely my preferred setup. But it's really important, I think, to be trading a defined plan. So, for example, this causes me to miss trade sometimes, which is, I think, fine. It doesn't feel good to have a idea. Like, for example, I wanted to add here, just taking this low, and I waited for it, and didn't come. And then you have this big impulse. But you really have to let ideas like that, things like that go, and not be reacting to price. So, if you had a plan to say, hey, if we break out of this range high, I'm going to long here with invalidation under the last pivot or whatever it is, that's perfectly fine. But you certainly don't want to be always reacting and surprised by price action, have no plan, and just be, we'll take a look here. Let's see how many longs opened up at the top of this move. We can look in order flow. Give me 1 second. This is very common. We'll actually look on both sides. You do not want to be one of these people. All right, so we're going to look at the cumulative volume delta here, or the delta in these candles. And we'll see some of this is shorts getting squeezed, some of it's longs opening. But in this 15-minute candle, we have 114 million volume and a positive delta of 23 million. Here we do have a negative delta of 1.7 million. So it's flat pretty much in relation to a 92 million volume candle. Here, right near the top, we have a positive delta of 7 million volume and a 20 million volume candle. That's a pretty big positive delta. Obviously, people are aggressively longing here. And now we see negative delta coming in. And a lot of these longs are longs stopping out. You can see a decrease in open interest. So people long in the top, price is rejecting, stopping out their longs. And now what's going to happen to a lot of traders is they're going to start getting chopped up here, trying to long, trying to short. And we probably will just form a range, chopping people up on both sides. We can also see here, right at the bottom of this wick, we see this big negative 12 million in volume delta on an increase in open interest, right? So this means right at the lows here is really, there was a big peak in shorts coming in here. And the same actually was right before this move up. We see an increase in open interest on negative delta at the lows. Not as big, but 4 million shorts right at the lows. People shorting the support, shorting the bottom of the range, reacting to price action. And then they get squeezed out. Longs start opening. And we can get a sense for, well, how many of these shorts that opened on the way down here were profitable shorts for the traders in them. Well, considering how many shorts got squeezed out here, you could imagine not many, right? People getting pretty bearish, expecting a big breakdown. That produces liquidity, and we have this big move to the upside. And so my preference, as personally, is always going to be longing support, where people are shorting, where you see heavy shorting coming in, absorption. Absorption refers to limit orders absorbing all the selling pressure, where there's clearly defined support, clearly visible reactions, and ultimately shorting where longs come in. But typically, I won't be opening trades just based off of order flow. I'd like to have technical confluence as well. All right. So we can, we could watch some low time frame structure here. Certainly could claim that this is our first structural support on the chart. Be surprised how often price reacts relatively cleanly to low time frame structure. I did get just had this chart open for a reason. I didn't take this trade, but it's interesting. We had a really clean interaction on Rose there. I did want to see, I shorted the highs of Matic here. We actually had a really nice valid entry trigger right at the highs, right into this ascending structure. I was interested in a long. I wanted to come take these lows, which still might happen. I have an alert set there, and could offer a nice tight invalidation long. I had some ideas on Doge as well to come down. I shared this up here to come down and test this region. There's a high volume area here on the volume profile. I didn't end up taking that long though. I typically am more focused. Oh, yeah, I think I keep moving the mic away from my face. I typically am more focused on trading Bitcoin and ETH, but occasionally trade alts if there's a nice valid setup. Luke's asking, where's a good source to learn how to read order flow? Well, the Lucky Apes trading floor, I think, is a good place. I certainly talk about it a lot and have some educational content on it. That's but there's going to be other places too. Yeah, like if you type in CVD, how to read CVD, how to read order flow, you're going to find a lot of stuff. I think the hard part about anything, whether it's technical analysis, whether it's order flow, is it's one thing to learn it. So where you say, okay, I understand the general concepts here. And it's another thing to apply it every day. And that's one of the reasons I share all of my updates the way I do and my live trade ideas. And I talk about order flow on live price action and all that stuff, is because I think seeing it on live charts every day can really help cement the ideas into your head. Yeah, because it's a really like so many things look good in hindsight. For example, this is such an easy long for me to take. It's such an easy long for me to plan for. But I think for the average person, this doesn't, even if you kind of know the idea of sweeping this liquidity and longing the lows of a range and a reclaim, it doesn't look particularly clear to be planning to take a long here. But in hindsight, it's like, oh yeah, of course, that makes perfect sense. So I think, having those updates can be helpful for sort of seeing the ideas play out over and over again. Just looking at the chat here, there's some discussions about ExoCharts. Yeah, it is a paid program. There's a program on a website called gocharting.com that is free, and you can get a lot of the same info. I'm kind of curious to see, I'm curious to see this play out, because structurally here, if we start breaking down, it's not uncommon just to retrace the whole impulse if we don't hold up some of the local structure. And I'd still consider this important support and potentially a long trigger. We can even see here on a low time frame, I kind of referenced that grinding price action, where this is clearly grinding structure, grinding higher lows, higher highs, and it ends in an impulse. It's very common to see that. And so you can kind of visually differentiate between grinding price structure and ranging. See, grinding ends in an impulse. Not always. I'm just saying it's something that happens commonly. Horizontal ranging is less likely to end in an impulse. Grinding ends in an impulse for the downside. That's funny you say that, Jonathan. He says, sometimes the plan trade seems too obvious, makes me doubt the trade. I actually, if if I run into any kind of bias, over time it becomes so, like, trade setups are so obvious, they're so easy, and they work so often that, like, I'll be sitting there and be like, it just seems so easy. Like something like this, it seems so easy to long this. How can it, you start doubting, like you think the market's going to get smarter, and it's like everyone's going to be looking to long this because this is so obvious, it's so common, but it seems like the participants never get any smarter, and the same things just work over and over and over again. So sometimes that thought dawns on me when I'm about to enter a trade. I'm like, this is just too easy, and there's no way this works, and it just works. You do get the sense that, I guess ultimately people don't spend a lot of time actually looking at the charts and making note and understanding of how price action and liquidity, what kind of price action liquidity generates over and over and over again. And so, people are mostly just making emotional decisions, I guess, and that's been the nature of the market since its inception. So someone's asking, can you explain a support resistance flip briefly? That basically the idea is that if a level's been holding as significant support, so let's go there's a couple high time frame examples here that are easy to point out. So this is one. This was high time frame support. Now you anticipate it acting as resistance, which it did. And it's just an important level. So that's a support resistance flip or a resistance to support flip. Same thing here. I'll point out because I did take this short. There was other confluences too, but this wick support and the support resistance flip is support. You break down the level and then price comes up and retests the level as resistance. So that's a nice technical confluence there, and was one of the reasons I shorted this move back in last year, August of last year. But yeah, that's the basic premise, is what was previously support is now resistance. What was previously resistance is now support. And same thing goes here. On a low time frame, we see this level that we've been interacting with. When price breaks above it, you might anticipate it to act as support. This was resistance. Price has broken above it. You might anticipate it to act as support now, and that would be a resistance to support flip. And so we can see price is certainly interacting with the level. You could certainly justify, I don't typically give scalp ideas, but you could scalp this level, right? You have a local swing failure right into that SR flip. You'd be surprised how precisely price interacts with these types of levels often. But of course they can break down, right? So you need to always use risk management. But these are the things that give a trader edge over the market. I'm actually going to, okay, this is kind of fun, maybe. Let me change the time frame of this and I'll switch screens. No, I'm not shorting anything yet. I mean, there's certainly probably scalp shorts, but so we can see here really quickly, we'll go to the 5-minute in XO. So we see here price is breaking down. A lot of this is long scan stopped out, but some shorts opening as well. And the 5-minute, 11 million volume, negative delta of 5.8 million. And now you're starting to see some of that punished. But we also have now what was support is now resistance. We have another local level to claim. I would pull this from the last impulse. This is the 1-minute chart, by the way, but you'll notice like these are all technical, structural. You could short a sweep of these highs into the 618. It's a scalp short. But scalping is something you have to do with care. I don't think scalping is one of the hardest forms of trading because you're constantly having to make decisions and you're having to make quick decisions, and execution can get a little sloppy especially if you have some poor execution. You take a loss or two in your scalping session and then you start trying to recover that, and it can go downhill pretty quick if you're not an experienced trader. Someone's saying, lucky we just bounced on the retest of the downtrend from the top. Yep, I know. I have that level, although apparently it's not pulled very cleanly. What happened there? That's kind of funny. I had it pulled wrong, but it's exactly where we bounced from. Yeah, if you're doing a scalping session, you certainly, maybe you're expecting to take 4 or 5 trades in a day, or some people scalp much lower time frame. And obviously, if you're even just aiming for a 50% win rate, but your winners are bigger than your losers, but you also have to be willing to accept there's going to be losing sessions. You don't want to start revenge trading. You just want to be prepared and focused, and if there aren't any clear setups, then just don't take trades. Yeah, I scalp. Just a lot of my updates aren't, I don't typically do a bunch of scalping updates. But what you will find is, I kind of refer to them as scalp entries. Like, I'll have a high time frame idea, but I'll use low time frame ideas to scalp my entries. So like this Matic short would be an example where price is coming up into my level, and I'm using the sweep of this high and the rejection as a low time frame trigger for this short. So I'm kind of scalping my entry based on low time frame price action. See this nice grinding price structure we had. But yeah, it's not uncommon. Like say, like this low time frame rejection off a sweep of these highs, like things like that will often be my entry triggers. And I'll be looking at high time frame ideas, but looking at low time frame structure for my entry trigger. But I do think, especially like paper trading, scalping is a really great way to learn how to understand price action. And generally, these same concepts play out on all time frames. Fibs are relevant, just basic structure, bearish, bullish structure, higher lows, lower highs, key horizontals are relevant. Like we see these interactions. It's just happening on a really low time frame, the same stuff you see on a high time frame. And so when you're looking at low time frame price action, even if you're not trading it and you're just watching it, charting it, you can be exposed to these concepts that if you're learning them from the LATF more quickly. Someone's asking, what is my thoughts on the easiest type of trading? I don't really like the reason I say scalping is hard or maybe even dangerous isn't because necessarily I don't know if there's easy types of trading, honestly. I don't know if there's any type of trading that's easy, but the reason scalping is dangerous is because you can lose a lot of money very quickly as an inexperienced trader, and you can go on tilt more quickly. You have less time to recover from the emotional sort of impact of loss streaks. And so from a newer trader perspective, the reason maybe swing trades, trading high time frame ideas are better isn't even necessarily because it's easier and it's easier to make money necessarily. You could argue that, but it's easier to preserve your capital. If you're just trading high time frame ideas, some work, some don't. You have to make less decisions. You have less opportunities to get shaken out of positions or to move your stop loss or oversize or all those things. So to recover from, just it can be frustrating, right? If you say, let's just say this long. I'm sure this happened to a lot of people. They longed, and then they saw this happening, and they just closed their long. And a lot of people, maybe they flip short. They're like, this isn't working. There's no way this holds. We're going to 10K. And then this happens, and they're really frustrated. I was in this long. Why did I close it? Why did I short the bottom? That sort of thing. But now at least maybe they have a day to recover from that. But if you're scalping, you can make a series of those errors very quickly, and then all of a sudden you're spiraling out of control, and you're, 1 or 2 days of that can be very destructive for a new trader. No one likes to hear this, but your goal as a new trader honestly is not to make money. It's just to not lose money, to lose as little money as possible, to preserve your capital until you actually know what you're doing and you understand. You've built a trading system, and you understand even your emotional and psychological triggers and makeup. And then to navigate all of that with your technical system and technical trade ideas with capital once you understand it. But typically the focus shouldn't be on how much money you can make. It should be on how much money you can lose if things go wrong. And risk management is a tool to protect yourself. But it's like this is all nice low time frame price action for scalping. But again, it's like in the Discord, I'm typically not going to be doing 1 minute chart updates, scalp ideas all day, because that's just confusing for most people. I don't like. I might do scalping sessions or ideas occasionally, but if I'm in one update, I'm saying I'm not really interested in shorting here. I think these highs are likely to be taken, but then I'm like, I'm scalp short here. And then everyone's like, well, I thought you were long. I thought you thought there was higher. It's just confusing if you're giving updates on the 1 minute chart and on a higher time frame as well at the same time. But you can take those concepts and apply them, if you wish, to low time frame price action. I think a lot of members do a lot of scalping, it appears, in the Discord. Yusuf says, create a scalp setup right now on Doge. Maybe we can get some ideas. Let's see. So what I'll say about that is, you don't really create a setup in a sense. I mean, you mark out levels, you wait for them. It's not really magic where you can just find a trade necessarily anywhere. But yeah, I would say I'm not really that. I'm not going to do that. The point as I go in and talk about how scalping is potentially dangerous for new traders, then go to a random altcoin and be like, hey, let's scalp the 1 minute time frame here. But I would say this. This is for everybody. Your goal, if you're new to trading, should not be you shouldn't be in search of your next trade. You're not looking for the next signal, the next way to make money, the next, someone give me a trade setup. You should be focused on developing yourself and learning. Trades opportunities aren't going to be going anywhere. And so I don't really like to see the focus of new traders being on what is the next trade I can take. And they don't really care why. They don't really, I don't really like that. We can watch some of this stuff for educational purposes while we chat. But yeah, I'd say on a low time frame, we have a reclaim. But all of this is, so this is all technical price action, but price can just break down too, right? But you're seeing signs of strength. You're seeing the sweep of, this is a local swing failure on the 1 minute chart. You're seeing a potential SR flip of this previous low. But this is all low time frame price action. I think typically a trade that you're going to enter, like this is what you shouldn't be doing. You shouldn't be waking up or sitting down at your computer, opening up a random chart and looking for a trade. What trade should I take now? Or thinking, I think this is the mistake people make, is they open the chart and say, should I long or short right now? I'm going to open a trade right now. Oh, this looks like a long, or it looks like a short. We reject it. You don't have a plan. I mean, typically you'd like to be trading ideas that you've had planned for even several days, right? Maybe you've been waiting for a setup for several days or a day, and you're executing that when that trade setup comes. But you certainly don't want to get in the habit of just opening up the chart, having no idea what's going on, and just deciding if you're going to long or short. Yeah, so I do want to just review quickly. My high time frame perspective here is, let's just delete some of this stuff. I would like to see these highs taken. It doesn't have to happen today. I'm willing to adjust my perspective here, but I'm not going to just short this initial impulse. I'll wait for some structure to form. I'd like to see these highs taken, but there's a major high here at 32,000. If we break out of this and claim it, I've said this before, there's barely any structural resistance here. So price can move very quickly up through this from 32,000 to 40,000. I would think if that happens, likely that we're aiming for the 50,000 region above this high. But until we take that resistance, there's no reason to suspect that's going to happen. But we'll see how price interacts with it. This is okay, I'll answer a couple of questions here I'm seeing. A liquidity grab is essentially this idea of the reason markets create liquidity, let's just say people have open longs up here and they've put all their stops under these lows. Price comes down, or their liquidations, price comes down and grabs that liquidity. The market needs liquidity to move, really, and for positions to fill. So big traders have an incentive to push price down into liquidity, to fill longs or to unload shorts. Everyone who is up here got wrecked on a low time frame. You can imagine, over the weekend, longs are opening and shorts. Well, where are they all putting their stops here? Overall, these few days, right under the range low. So price comes out and wicks through that liquidity. So it stops everybody out of their longs, allows bigger traders to fill their long positions with that liquidity. Some people are breakdown shorting, and then price moves to the upside, stopping out all these shorts. That's also liquidity that can help drive price up. So that's the basic concept of liquidity. Yusuf is saying, what steps do we need to follow to create a scalp setup? Don't worry, we are not taking a trade by setup. We are creating, it's just for learning. Honestly, the steps you need to take, there's not a simple answer. You need to learn, in my opinion, you need to learn how to chart price action. You need to learn how to understand liquidity. You need to understand technical analysis, invalidation, risk management. And you probably have a few months of work ahead of you before you should be, this is my opinion, before you should be trading with live funds and trying to trade scalp setups. I think the LATF is a great place to do that. The problem is, you know, there's so many people with this perspective on trading that it's something that you learn how to do from a tweet, or it's something you learn how to do from one video or an answer. It's a skill you develop over time, and there's a lot of things that go into it. And there's not always one answer for every question. There's many answers, and there's context-dependent answers, and you need experience, and you need to be willing to put in the work. And so I would just say, you know, I don't think I really do. I don't think I really misrepresent the fact that trading is a very difficult thing that requires a lot of work and a lot of time and effort, and you should do it safely, and you should start with paper trading and then a small amount of money and slowly grow your account as you start to understand what type of trader you are. But I think a lot of people just want a quick, easy answer because it seems easy, right? It's like, oh man, I could have just taken this long and I made a lot of money. And that can happen, but over time, you'll find that your execution is very poor, and you can't consistently be patient. You know, there might be the idea of, say, waiting for this low to be taken, and then this happens, and you're like, it's not going to get taken, and then you end up longing up here, this happens, and then even on these little 30-minute wicks here, you long again, you get stopped out, and when it finally breaks down, you say, I don't even think we're going to bounce here. I'm not taking that long. You took it early twice. Maybe you oversized. You got stopped out twice. You don't even take the trade set up, and then the move happens without you. And those types of things will just happen over and over again as an inexperienced trader. There's obviously outliers. There's people who can just execute well right from the get-go, but that's not the average person. I have some educational content on Elliott waves, but not a lot. I'm going to do more. It's a really complex subject. And honestly, there's a great book, Elliott Wave Principles, Key to Market Behavior, that is sort of should be the guiding piece of content on Elliott waves. It's sort of hard to do or to replace that with something of value. But yeah, so, you know, the other thing is just timing. It'll be interesting. Like, I'm probably not going to be doing anything. I'm not saying there's not scalp setups. I'm not saying price can't go straight down or straight up, but I'm going to be letting price structure develop here. You know, let's look at the 4-hour chart to get some context. We've been looking at the 1-minute chart. This is kind of dead space to me. Yes, local structure could form and produce a setup, but you know, there's really nothing to trade here, in my opinion. There's no clear setups. So waiting for these highs to be swept for potential short setups, or up here would obviously be a higher time frame idea, or waiting for retracements for opportunities to add, to come maybe down and retest this support. Other than that, just sitting and waiting. Someone's saying, do we need to go through all the books of Mark Douglas? Good. You don't need to, but I think you would gain. There's a lot to be gained from doing it. I'd highly recommend it. There is some education. If you go into on the YouTube channel, my YouTube channel, there is some educational content there that's just public and free. There's an educational playlist, so certainly might be worth going through. But yeah, so I just wanted to kind of touch base and go over my general plan here on Bitcoin. I'm just waiting for clear setups. clear structure to be interacted with, seeing how price reacts, and might take some trades with clean invalidation. I took a loss on the way down here and basically a break-even trade, and I made the update at the time when I closed the long right under break-even. I rarely do that. I rarely open a position and don't just let it get stopped out or play out. But I had to come back and reevaluate that this is just grinding price structure. It's probably most likely going to end in a further impulse down. And so sometimes, you have to just try to be as objective as possible. Sometimes you get into a position that you realize I probably should close. I try not to do that. But it's actually, I was pointing out, this is a pretty rare structure to have formed to the downside in the context of this move up. We haven't really seen, we saw it here, a little bit of grinding price action to the downside. But other than that, on that time frame, we haven't seen it a lot. We've seen the impulse and then horizontal ranges, which typically, like even something like this, can offer really nice scalps where you're likely to get a TP1, and even if you end up shorting that local range. But this became much less likely here to be a horizontal range where you're even likely to get a TP1 out of it. As you notice, it's just this structure. I did just want to talk about those losses I took, because you certainly don't want to give the impression that you never take a loss. I think I've talked about it on Twitter, but worth noting here. Obviously, the goal in trading is to not be perfect and understand that losing a trade is just as much a part of your trading plan as winning a trade. That's why you have invalidation. I want to be long here with invalidation under this range, because if we break down, I want out of that long. I don't really care if it's a winner or a loser. I just want my loser to be small and my winner to be big. And you just want to repeat that process. Look for wait, be patient, look for clean, valid setups, trade them with risk management, let those trades play out, take profits from those trades, rinse and repeat. The market produces endless opportunities. There's no need to ever feel FOMO, like you've missed the move. I mean, FOMO leads to longing up here. I've missed all my opportunities. I thought we were going to break down. I'm long, and then this happens. You get wrecked. Where you could wait and be patient for clean setups. But anyways, certainly been an interesting trading environment, I think, through this range over the last month plus, 1.5 months. And happy to have caught pretty much most of this, catching the longs at the lows, caught some shorts, caught some ads. I did catch a short here. I did take a long. I did take a long in here that worked, and I took a long in here on ETH. I did miss a long here because there was the idea of longing a reclaim of this range. And I missed an add to my shorts here. So anyways, it's not all perfect, but certainly got a good chunk of these ranges and moves, and happy to be in this long. But anyways, I'm going to wrap up the live stream. I like to do about an hour. And I'll be around in the Discord throughout the day. All right. See you guys.